it is time for Rapid Fire. And here to take on the headlines are Bill Griffith, Elon Moy in the House, welcome, and Robert Frank. It's great to have everyone here. Roku, of course, is not Rapid Fire lately if we're not talking about Roku. It's higher again today. This has been a huge week for them. They got an outperform to RBC this morning, which says a more compelling valuation is one reason. It's hard to believe after this run-up. Strong fundamentals, favorable positioning make it one of their strongest plays in streaming video. They also boosted the price target by $48, which is another 30% rally. Here are the Roku shares, which are up 14% this week and have now nearly quadrupled on the year. So this is a huge momentum name. We got confirmation of that with the 13D from Ken Griffin this week that Citadel owns a big piece in it as well.
You know, with the streaming services coming online, this is going to be a boondoggle, I think, for a lot of these the devices that are out there. And Roku has been the leader in all of this. And I was just talking to our Todd Hazelton, who does reviews of these devices, and he was telling me that Disney Plus hasn't signed up yet with Fire TV. So if you're going to start to have a little turf wars with some of these streaming services that could become very popular, but they're not available on all the devices, right. I mean, then you may have a real situation there. And it could be a great thing for Roku here, right?
You wonder, though, I mean, I have a smart TV, right? So I have, you have all the streaming services on your smart TV. So I don't really understand what Roku does, but I'm told that for people that want to aggregate it, and it is a smoother sort of cross-channel device.
Some of the smart TVs actually use Roku technology in order to kind of present us that experience. But for the most part, yes, they're trying to.
But what my big question with Roku, at what point will they start becoming a content provider? At what point will they sort of realize, look, right now they're very dependent on Amazon, on YouTube, Google, and on Netflix.
Right.
At what point do they say, look, if these guys pull out, we're toast, so therefore we have to start producing program, which, as we know, is extremely expensive today.
They have, I think, a movie channel type thing. They were especially working on the advertising stuff. We talked about how they have these new pop-up ads
primarily they seem to be an advertising business now. And so I think the question is, how much will consumers accept all those ads popping up during those streaming services?
Or
are you going to shell out the money without paying for it? Or are you going to pay for it in dollars versus in eyeballs, right? And sign up for something like Apple TV, which is what I have, so that you don't have to watch all of those ads. You cannot escape the ads.
My new thing is the DVR has never looked better, and I stand by that. Next, Facebook and Google are causing more headaches for the ad industry. Shares of French advertising giant Publicis plummeting today after lowering guidance for the second time this year. They're now expecting organic revenue to drop, and they are all struggling to deal with the growing dominance of the tech giants. And they face new competition from people who are trying to position all of these clients more nimbly for the online world. Consulting firms are now a big consulting firms for these ad giants. This is not Mad Men anymore. We are far away from that.
Oh, we are way, way past Mad Men days. I mean, and social media plays a huge part of all of this. We're going to talk about productivity in a little bit here and what the Fed's looking at, all the free stuff that's out there. And on social media, that's a very effective way to advertise these days in the non-traditional sense.
And they need big data and all of these different ways of best using those platforms that don't necessarily play to the historical, traditional storytelling type TV-focused strengths of these ad giants.
Yeah, and I think that the advertising business and the way that the internet platforms have dominated them, I mean, that is low-hanging fruit for regulators. That is why the state AGs are going after Google primarily on advertising. Maybe some other issues will come into that. But the ad business is where they are focusing their attention to begin with, because it seems to be the biggest and most obvious problem.
Yeah, Facebook, Google together, 2/3 of the ad market. It's amazing that we have any agencies left. I mean, with them fighting over the 1/3, in addition to all the other digital companies out there, there's just not that much left.
Yeah, no, it's pretty shocking how quickly it's happened, too. You wonder if they're kind of the ones pushing some of this, like, crack down on these guys.
Right. There's probably a whole generation out there that has no idea what a TV commercial is. Right?
You know the first millennials are going to be 40 next year? Anyway, I'm trying to make it. Okay, what's the internet worth to you? This is what Bill mentioned a second ago. The answer to this question is exactly what the Federal Reserve wants to know, because it's struggling to explain weak productivity and GDP growth. Elon, some of these nuggets are hysterical. I mean, but people would really need to be paid a lot of money to stop using their favorite services.
That's right. So basically what the story is all about is how do you value the digital economy? And the problem with all of our official statistics is that they're based on price. Well, if these services are free, how do you account for them in our standard tools of measurement? So what some researchers at MIT did, and this is what the Fed has been looking at, is survey a bunch of consumers, a bunch of viewers and users, and say, how how much would it take for you to give up this service? And they found that for something like Facebook, it would take $48 for people to give it up for a month.
For a month?
For a month, $48. But if you want to give up something like search, it's going to cost you $17,000.
Yeah, that was the
value that you place on it. That one's for a year. Yeah, that one's for a year. But
Bill and I would both pay more than that.
Well, you know,
need to be paid because we use. I mean, it's crazy how reliant we are on this.
For our jobs. Absolutely.
But the way you phrase that is important. So there's a difference here because I think a lot of us would say if asked how much would we pay for this,
right,
the number is not very high. But how much would we have to be paid to stop using it? So that speaks to the business model.
And Jerome Powell referred to this the other day, and they're trying to figure out how to quantify this in their measurement of GDP growth out there. And I was thinking about this for my own life. You'd have to pay me a lot to give up playing golf, but you wouldn't have to pay me a whole lot to give up watching Giants football games, for example.
What does that tell you?
And these valuations...
Is that just because of this season, or...?
These valuations, we've looked at it in terms of the productivity, but what about in terms of the consumption?
What is the benefit that consumers find in some of these services? I thought it was interesting that when they surveyed users on Twitter, the amount that they would need to give it up was zero.
To give up Twitter itself.
To give up Twitter.
Wow.
Yeah.
And then Europeans, though, weren't they?
Yeah, they were the Europeans, so it's a whole different business model over there.
Who, by the way, love their WhatsApp, and that was another nugget here as well. I mean, the bottom line, too, is growth better? Is productivity better than we think because this value is not being captured?
I think it's being undermeasured.
That's the argument. Yep, right? Absolutely. It's raging out there. Finally, and what a week it's been for the NBA in China. I mean, wow. NBA says it's canceling all media availability for the rest of the league's time.
Excuse me, sir. I'm sorry. We're live television here. Excuse me.
The league's time in China will come to a close following tomorrow's game between the Brooklyn Nets and the LA Lakers in Shenzhen. So, Mr. Chemi, we've brought Eric on here to help break down the events of the week. The other kind of interesting thing that's happened the last day or two is China realizing that it can't risk alienating the NBA altogether. Because if you have 500 million fans, you presumably don't want to upset too much.
But they removed all the sponsors from the court. So that game that was played yesterday, it was just a blank and empty court. That game was played in China. It was not aired in China. Right. So the only people that could watch it were us here.
And the people in the stadium,
and the 15,000 in the stadium, arena, very muted crowd, and they were handing out Chinese flags on your way into the stadium. So look, if China wanted to, they could just say to their country through their state-run media, the NBA has offended us. The NBA has gone against Chinese values. We're banning the NBA from here. And maybe they could convince people, yeah, we're going to side with the government because the NBA is bad. But they probably know you can't convince 500 million people of that.
I mean, that was my question is, yes, we've only heard from the Chinese government on all of this and how upset they are by it. But we haven't heard from the Chinese fans at all.
There was an interesting piece in the Wall Street Journal today that did interview a lot of fans, particularly of the Houston Rockets. And the Rockets are a very special Chinese firm.
They had Yao Ming
there, and that's where it all started. And a lot of diehard lifetime fans of the Rockets are saying, you know what, we're out.
Chinese fans.
Social credit score is probably going to hurt you over there if you start watching Rockets games.
And it's because we underestimate the amount of nationalism in China right now for all sorts of reasons. And the timing of it, the actual specifics of the comment and the way it was handled, it did turn a lot of fans off.
And it was interesting to me when you said, what is the value of Tencent's contract with the NBA?
So Tencent
they could hurt the players themselves.
$200 million a year for streaming rights in China. In the same way that ESPN or Turner pays the league for rights, Tencent has their deal. $200 million a year. If that goes away, the league and the players split at 50-50. So now $100 million is gone from the teams. That's $3 million a year in salary cap. If you're a max player like Klay Thompson or whoever, LeBron, that's $5 million over the course of a 5-year deal. That's why the players are quiet, too.
Right. The players have been very quiet on this, and guys like Klay Thompson have shoe deals with Chinese companies.
His deal is with Anta. It's maybe an $80 million deal over 10 years. Wow. Makes annual trips. I mean, it's not like he's selling Nikes in China. He's selling Chinese shoes.
Exactly. And that's why we haven't heard much from the players. Real quickly, because we are, following the news flow to see if we get this trade deal, so to speak. You have to, does the NBA breathe a sigh of relief in that case, or does it now seem like this is a completely separate issue where Adam Silver has to figure out how to patch this over?
Because the trade deal is about tariffs. This is about watching games. There's no tariff on watching a game.
Right.
So this is totally unrelated. And you saw the way that President Trump, he didn't really get involved in saying this is the outcome that I want. It's just they got to figure it out.
Right.
This is not a tariff-based issue for me.
Right. Even he didn't really take sides in it as well. But, again, maybe China's realizing they don't want to push it too hard.
But they've warned the NBA, you pull this again,
Have they?
I mean, think about it. Just we've gotten the point.
Yeah, the point has been made.
We've gotten the point, all
yeah,
right.
I think that's been made loud and clear.